Hey YouTube. I always love that clip. I love that movie, honestly. And it's always funny because that's my name, and I played an enchanter in EverQuest for 20 years, so it was always kind of funny. And in fact, one of my supervisors got me a hat that looked just like that, but that's for a different story. Today I want to talk to you about how to do the wheel. So this is going to be a beginner's tutorial on how to do one of these safer stock market options trading strategies, basically where you sell a put, collect premium or collect money for selling it, just like when you sell something you get money back, and then once that eventually gets exercised and you get 100 shares, you start selling calls, and then you start getting premium from that too. So then you just keep doing that over and over. You get much better returns than keeping your money in a savings account that doesn't really give you any real interest, and it will usually give you 1 to 2% return every week, as long as it doesn't drop too much. But even if it does, there are ways to do repair strategies to at least break even, or you can do a rescue mission if it drops more than 30 or 40% for some reason, and then you can do something in order to lower your cost basis and still try to make some money eventually. I mean, if the stock goes down too low, there isn't a whole lot you can do except wait. But unlike buying a call, at least you'll have an asset that you can have. So at that point, it's just a matter of waiting. If you liked the video, don't forget to hit the like and subscribe button down below. It does greatly help out my channel, and I will have a link to my Discord where I give stock picks every week, and actually every day during the week. Now, sometimes there aren't any good picks. I will put that in the Discord also. And let me know what you think about this. I'm thinking about starting a Patreon. I'm not going to charge very much, but just that way I can show you what trades I'm making when I make it, for people who want to help support me with Patreon. Just let me know in the comments if that's something that you think would be cool. And I'm going to be going over how to do this in a couple different brokerages. I'm going to show you how to do it on Robinhood. I'm going to show you how to do it on Tradier, and I'm going to show you how to do it on Tastyworks. If you have a different broker, you can simply call their customer service or email them, ask them to help you with that, or look on YouTube for some videos on how to do it on that specific broker. But more often than not, selling puts and selling calls is fairly straightforward on most brokerages, so it shouldn't be too hard for you to figure out. Now, before I go into how to do the wheel strategy, I do feel it is important that you know there are some rules that you would need to go by, or else your wheel is going to get deflated and you're going to be trying to run the wheel on a flat tire, and it's not going to work out well. So there are some basic rules. One, only do the wheel on a stock you want to own. If you find yourself panicking because you're going to get assigned, then you pick the wrong stock. You need to pick a stock that you do not mind owning for the long term, in case the price does go down so far on the stock that you can't sell calls right away and you have to wait. So make sure it's a stock, a company that you believe in and that you want to own their stock. Otherwise, this is not going to be a good option for you. 2, you want to make sure that you choose value stocks rather than growth stocks. And you can find that out by either checking their financials. You can go to TradingView and look at the stock, and if you scroll down to the bottom right, it will show you their income and revenue. And if their revenue is going up but their reported income is negative, that means they're losses, then they are a growth stock, not a value stock. So keep that in mind. Like, growth stocks are nice if you're willing to take the risk, but they have extremely high IV. So that means, yes, their premiums are going to be higher, but they will jump up and down in price far too unpredictably. So it's a good idea not to do them unless you really like the company and you do your own research about it. then it's up to you. But I do not personally like doing the wheel on growth stocks. I always like doing them on value stocks that I believe in. 3, look for an IV of a stock that you like that's between 30 and 60%. That will guarantee good amount of premium that's not overly high, and also that doesn't jump up and down so much so that it's gonna drop $5 or $6 in a single day. Typically a stock with only 30 to 60 IV is not going to drop that high or rise that high either. So keep that in mind. The whole point of the wheel is that you would like to do this on stocks that you believe are going to either go sideways or go up, but there are some times it's going to go down, which is why you sell puts, and you can collect premium that way and grow your account slowly over time. Still far faster than putting it into a bank account, and also probably even faster than putting it into an index fund. Just the index fund, you can get 7 to 8% return. You can get 3 to 4% return a month if you do this every single week. And you don't have to spend all day in front of the computer. You can simply spend 30 minutes to an hour researching the stocks that you want to do, place your orders, and then you're done for the rest of the week. You really don't even have to monitor it unless you really want to roll it. Or also sometimes I like setting a limit to where at like, for instance, if the put just makes profit like right away, I get up to 90% profit on the put, I'll go ahead and buy it back for just 10% of what I was given. That way I can go ahead and sell another put right away before the end of the week. So that's something to keep in mind. Again, I'm not a financial professional. I'm definitely not your CPA, tax professional, any kind of lawyer for you, anything like that. This is just my recommendations. Sorry if I didn't explain it just a second ago, but IV, which was what I was talking about for options, is implied volatility. And what that basically is it's a estimate of the future volatility of the stock that you chose, and it greatly affects how much the options premium is. So it affects how much money you get for selling a put or selling a call. The higher the volatility, the more the premium, but also the more that the stock can go up or down. So keep that in mind. So first off, I'm going to show you how to do a wheel option, or at least the first part of it, and I can explain how to do the second part with the calls when I'm done with that part. But I'm going to start with Robinhood just because I have it up. I've been helping my dad out with doing the wheel strategy for his account. This is not the stock that he has, but it's just one I have on Tradier. So that's my personal brokerage, not Robinhood. But I can show you the option chain. I do like Robinhood's option chains. They're easy to understand. So in order to start the wheel, basically you want to sell a put. And a put is basically when you sell it, you are saying you will sign a contract. Basically, that's what an option is. It's a contract for 100 shares of the stock, in this case Newegg. And if the price of the stock goes below the strike price that you chose, you are obligated to buy 100 shares of that stock at that price. So on Tradier this last week, I had sold a $15 put, and I had received premium at that time of $26, and so I get to keep that premium. And then this last Friday it did dip below $15, and so I was assigned and I purchased 100 shares at $15. And then today I sold a call for $28. So that right there is giving me $54 in premium alone, and I can do that over and over again, just rinse and repeat. So that's the beauty of the wheel. Once you have it started, you can just keep going on and on. But in order to start, you have to still sell a put to start it. So for instance here, if you had $1,450 because you need enough to buy 100 shares, so at $14.50 a share, you would need $1,450. But you sell the put, you get $42 in credit. It's 42 cents per share times 100 shares equals $42. And then, like I said, you just have to wait. This expires October 1st. If you wanted to, you could go out to October 8th and you would get $94. I like doing this on a weekly basis, just kind of makes me feel like I'm getting a weekly paycheck, but that's a personal preference. And then if the stock price does not go below $14.50, like if it's $14.51 and above, you don't have to buy the shares and you get to keep the premium that you collected. Nothing else has to happen, and then you can sell another put and make some more premium. Now, if you do get assigned the 100 shares, at that point you can the next week sell a call. That's where you are writing a contract to sell your 100 shares at a certain strike price and you receive money for it. So for instance, in my case, when I got assigned at $15, I sold my call at $15.50. So I actually sold at one step higher than the price that I bought them at. That way, if it does go above $15.50 and my shares get taken away, not only do I get to keep the premium, but I get the extra $50 from the stock going up also. So I will actually make $78 from that call if that happens. And if it doesn't, and basically nothing happens, if it doesn't go above $15.50, the option expires worthless and I can sell another call the next week. So that's how you do an options chain. Basically, the will you sell a put either until you get assigned, or you just keep repeating that, selling puts until you get assigned, and then after you get assigned and you get 100 shares, you can start selling calls and collecting even more money until eventually the price rises up. One caveat is whatever price that you pick for your put, keep note of it, because you do not want to sell a call below that amount. Like, it's always nice to make a profit even more, so if you can sell a call at a leg above the strike that you sold your put at, but if that's not possible, just due to not having very much premium, then at least sell at the same strike price that you bought them at. So now this is my brokerage Trader. You can see I have a total account value here of $1,551.56. That's my funds here. That's the extra money I have plus the value of the stocks that I own. So you can see here I have 100 shares of Newegg, and today I sold a call for $15.50 that expires this Friday on October 1st. So Tradier's options chains look a little bit different. Like, you go to the options chain, and this is what Tradier's option chain looks like. So calls are on this side here and puts are on this side here, and basically B is for buy, S is for sale, and you can see the premium here that you would get. So basically, when I started this, I sold a put here at the $15, and then when that got assigned, I sold a call over here for $15.50. So nice thing is you don't have to worry about clicking on the right thing here. You can simply click on here and then go to send ticket, and it'll bring up that, but you should still keep an eye out to what the ask price is, and you can figure out what the mid price is and be able to pick that. That way you can get the order filled. And that's a little bit more technical. If you have any questions about that, let me know. I'll be happy to answer it. But if you really wanted to, you could always just go with a market order when you put it in. It will work. It won't give you the most money, but it will work that way too. So that's how you do the options chains here on Tradier. Again, I'll show you real fast. You just sell a put here, and then once it gets assigned, or if it expires worthless, just sell another put. But once you get 100 shares, you would then sell a call over on this side. Just remember, calls are on the left side, puts are on the right side. Now this brokerage is Tastyworks. It is the brokerage I used before I went to Tradier, and I do like it. I like the wait list, the watch list here a lot better than I like Tradier, so I typically keep Tastyworks up at the same time during the day. I just like looking at it. I like looking at its chart features. For instance, here you can see curve, active, grid. And like there's a lot of nice features about Tastyworks that I like, so I tend to keep it up, even if I don't use it anymore. But in order to do the process here, it's a little bit more complicated. Same thing here, puts are on the right side, calls are on the left side. So in order to sell a put, you would have to left click here on the bid, and you can see here it says sell to open. That's where you would have gotten the premium here. So of course obviously you wouldn't want to sell a put out that's in the money already, so here it would just be 25 cents for the $14.50 put, and then you keep selling that until either you get assigned or you just keep doing it over and over again until eventually you get assigned. You will get assigned at some point, and I'm going to be discussing that. And then once you get assigned, you go over here to the left side and do the same thing here, except on this side you would click on the bid again, and you would sell to open a call once you have 100 shares. So it's a little bit more complicated, and their fees on Tastyworks are a little bit higher than I liked, which is why I switched. But I do like them to look at their charts and their watch list and everything else about them. Just, I didn't like their fees. Thank you for watching, and I hope you enjoyed the video and found it helpful. If you have any questions at all, feel free to ask them in the comments below, and I will be happy to answer them. Or if you're interested in joining my Discord at the link below for free, you can ask me there, and I'll be happy to get back to you and answer your question there if you want. Again, don't forget to hit the like and subscribe button. It does greatly help out my channel. And also, in the comments below, if you can, please let me know if you think me adding just like a $1 or $2 a month Patreon, just so you can see all my trades when I do them. And that will be up to you. Just let me know in the comments. I will be the first to admit that right now I'm only doing 1 to maybe 2 trades a week, so I'm not really doing a whole lot. I'm just slowly but steadily growing my account. So hope you enjoyed the video. Have a great day and good luck in the stock market.